Hello guys, welcome back to the Auto Affairs Academy. Today we'll be diving into market structure. If you are new to our channel, hit on the subscription button because we'll be dropping a lot of educational videos on this YouTube channel. Have you been wondering why the market has not been favoring you or others are making money and your chart is hitting SL? Today we will talk about all those things. Stay to the end of this video because you are going to learn a lot from this video. Let's talk about SMC structure. Now, a lot of people will come and say, okay, I want to trade with SMC, I want to trade with smart money concept. There's a lot of things that you need to understand before going into what SMC structure. Number one is what? How to master smart money concept. You need to understand that smart money concepts have stage by stage that you need to understand before diving into other blog. Let's talk about number one thing is what? Market structure. Now, what is market structure? Market structure refers how price move and organize itself on the charts. It helps traders understand the current direction of the market, whether an uptrend or a downtrend or a sideways market. Now you have understand that market structure help traders understand the movement of the market, which gives you a clear direction where this market is heading to. Let's say, for example, you go to your chart and you see that the market is an uptrend. You have already pictured that, okay, this is an uptrend market. What you need to do, you need to look for a buying opportunity. You need to look for a buying signal. You don't need to start looking for a selling signal when you have already understand that market structure tells you the direction of the market. Now we have three types of market structure, which is number one, we have the what? Uptrend, bullish market structure. Let's check an example of bullish market structure. Now, this is what a bullish market structure, telling you that this market is doing higher high, higher low, higher high, higher low, higher high, higher low. The last low is protected and the last high is broken, telling you that this market is going up. You don't need anybody or you don't need anything to tell you that you want to start looking for a selling opportunity unless you want to gamble with your money. That's why they call it smart money concepts. You are being smart, doing what others are doing in the market. This is an uptrend. You look for a buying signal and follow the trend and make money. Let's check some example of an uptrend. Now, price form higher highs, which I just explained, and higher lows. The example said the market keep pulling higher, breaking previous high, then pull back slightly but not below the last low, which I just explained now that the last low must be protected and the high must be what? Broken, for you to know that this market is an uptrend. The last low is keep being protected and the last high is what? Broken. Now we have the downtrend, which is the bearish market structure. Is just an opposite of what? Bullish market structure. This is a bearish market structure, opposite of a bullish market structure. Markets keep creating higher lows and lower low, higher lows and lower low. If you still keep going, it will still be showing you higher lows, lower low, higher lows, lower low, telling you that this market is coming down. As a smart trader, all you need to do is join the trend. My mentor will say, trade like the bank. Join the trend means do what others are doing that is giving them money. That is it. In this kind of downtrend market, we need to look for what? A selling opportunity. You don't need to start gambling with your money. No, in trading, we don't gamble. We make profits. That is one thing I love trading or opt for. It's a market whereby you come and make profit. If you know what you are doing, you are making profit. You don't need to gamble. When you see that the market is selling, you look for a selling opportunity and sell. That's why market structure helps you understand the trend of the market. This market, is it an uptrend or is it a downtrend? Like example say, price form lower highs and lower low, which I just explained to you in the diagram. Example say, the market keep falling, breaking old lows, then pull back but not above the last high. Opposite of uptrend is downtrend. The market keep protecting the last high, and the last low is what broken, telling us that sellers are in control of this market. And we have the last one, which is ranging or sideways market. So ranging or sideways market is just, we call it consolidation market. This is it. Equal highs, equal low. No one is above each other. We have the resistance and we have the support. The market is an equal high and is an equal low. We call this a consolidation market. And as a trader, when you see a consolidation market, you don't have any business looking for signal because you'll be trapped. You don't have any clear direction where this market is going to. So consolidation market helps you know that you don't have a signal on that trade or that pair for that day. Now, example of a consolidation market, they say price move between support and resistance with no clear highs or low direction, which I just explained now. The price keep moving equal high, equal low. We don't have any clear direction of the market. And the next one say traders often wait for a breakout before taking trade in this condition. So as a trader, why are you waiting for a confirmation? You don't know if the market wants to break high or you want to break low. So you don't need to trap yourself in the market on a consolidation market. You need to do what? Chill. Take a chill pill. Wait when the market comes to your direction. Either you break up to the resistance or you break out to the support. You now know that I have a signal to trade or I have something to make money from this market. Now we say why market structure matters. Very important. Market structure helps a lot, helps traders a lot to do a lot of things. Number one is it helps you know who is in control. Now, you already know that market structure gives you the direction of the market or gives you the clear picture of the market. The second thing is that it helps you know who is in control in the market. Is it buyers or sellers, which we call what the uptrend or the downtrend. You already know that if the market is an uptrend, the buyers are in control. If the market is a downtrend, the sellers are in control. You have already understand that one at the back of your mind. Number two say helps to avoid trading against the trend, like what I call counter trading. The market is buying and you are selling, the market is selling and you are buying. You are just gambling with your money. Forex is not a gambling state, a gambling platform. Forex is a trading platform. So you don't need to trade against the trend. Like I explained in our diagram, if the market is an uptrend, look for a buying opportunity and make money. That's why they say join the trend. And the next one say avoid getting trapped in the market. Now, why would they say avoid getting trapped in the market? We talk about the consolidation market. A consolidation market can trap you in the market. The market is not buying, is not selling. It's at equilibrium point. Buyers are there, sellers are there, nothing is happening. So your money is being trapped until a breakout happens. That's when you will know the clear direction of the market. The next one say make it easy to find entering points like your stop loss zone and take profit target. Now, when you understand market structure very well, it will give you a clear picture where you put your stop loss. That is a better truth of it. And give you a clear picture where you put your take profit target. Because you know that, okay, this last low is where market gets to before selling, or this last high is where market gets to before buying. So it will tell you that, okay, let me put my SL here. The market will not react to this SL. So don't be a liquidity to the market. It's very wrong. Market structure will help you when you understand the trend. You know the last low or you know the last high. You know where you should put your SL or take profit, that your SL will not be a liquidity to the market. And the next one say it's the foundation of smart money concept. Like when I started, a lot of people would be like, why SMC and I'm bringing in market structure? Have you seen why market structure is very necessary? Is what the foundation of smart money concept. If you understand market structure very well, Trading SMC will be very easy for you. You know that this market is an uptrend. What are you doing? You are looking for a buying opportunity. It will tell you where you see your break of structure, order block, breaker block, fair value gap, inducement, and the rest of them. So market structure matters a lot. We have what? Price action traders and technical analysis. It helps all these traders analyze perfectly in the market. So let's call market structure foundation of trading strategy. The last one is what? It makes you trade with confidence, not fear. When you understand market structure, trading with confidence become your top one priority. You already know the trend of the market. You are trading with the trend. All you need to do is what? Make profit. Even though the market didn't go your direction, if you are following the trend, that doesn't mean you are doing the wrong thing. No. I tell people that trading is not 100%. Nothing is 100% in this world. But if your strategy is 80, 85%, 90% accurate in your trading journal, you are good to go. So don't say, the market is an uptrend and I'm buying and it hit my essay. There might be a slight pullback. That is why you hit the SL. So understanding market structure matters a lot. So note, always zoom out first on higher time frame when analyzing is very necessary. If you analyze from daily time frame, 4 hours or 1 hour, always zoom out first. It shows you the true market structure. It will give you a clear picture of how the market is. It's very necessary. Then zoom to a lower time frame to find your entry. Let's say you are someone that analyzes from 4 hours and 1 hour. What do? Go to 15 minutes or go to 5 minutes and get your entry. If you find this video good and educative, do well to hit the subscription button so that you get updates on how to stay profitable in the financial market. Share to your loved ones also, and drop your comment about how your financial journey has become so far. See you guys in our next video. Bye.